Okay, yes. So, hello and welcome everyone to yet another live streaming episode that we have been doing for quite some time right now. Okay, okay. So, hello and welcome everyone for yet another episode that we have. Okay, so yes, today's topic actually is very interesting. A lot of things are going to be covered today itself, and there's going to be a second part of it in the coming week. Okay, on the next Tuesday we are going to do that. So hello and welcome everyone to the first session of advanced charting tools, or we can say advanced charts. Okay, so advanced charts, we have done, to recap. In the previous week, I suppose I covered Fibonacci retracements and what exactly is the logic behind Fibonacci retracement, what is the scientific logic, and why it is considered to be an important concept itself in the market, why it is considered important from the perspective of trading, from the perspective of understanding the markets itself. It is very important, right? And we saw not only the logic but also a very crucial concept which is called golden ratio. Now I'm going to post a single question on the chat box to see if anyone can answer that question. Okay, this we covered in the last, okay, in the last session we covered this. So this is the question: what is the golden ratio? Now I'm going to provide you options as well. Okay, I hope I'm audible to everyone, I suppose. Yeah. So option A is 1.617, option B is 1.614. I didn't write B. C is 1.616, and D. Okay, just post it in the chat box. What number is called the golden ratio, on which the whole Fibonacci retracement is built upon. We see multiple people have joined in. Yes, thank you very much, and hello to every single one. In the last session, as we are talking about, I taught the Fibonacci retracements, how it is and why it is important, the logic behind it, right? And we were talking about what is the golden ratio and how it is relevant from the perspective of trading, right? And golden ratio is present not only in the charting methods or in retracements, it is also present in almost every natural thing there is. Okay, every natural thing, every universal thing. Okay, distances of planets from the stars, distances of human organs, human body parts, distances of different things. Okay, there's also a golden rectangle that we came across, where we go on and we add up in the fashion of a Fibonacci series, and we came across what is Fibonacci series and where does this 1.618 come from. It comes from the Fibonacci series. So we covered a lot about the theoretical aspect, and we have got an answer, that is 1.618. Very well done, this Kevin sir. Yes, you have got the answer correct. The answer is 1.618. How it is 1.618, we have covered that. So if you want to understand what is this golden ratio I'm talking about, what is Fibonacci retracements, if you have heard of it, you might not know how to do it. So just what is the idea behind it? So go on to that particular video. And if you have seen the video, there was one thing missing in that video, which I suppose I'm going to cover now. Okay, so let me share the presentation with you guys. Okay, so here we are. Is it visible? The chart, the title is visible to everyone, I suppose. Okay, got a lot of highs. Thank you very much for coming in. I see. If you can see this particular title, just let me know in the comment in the chat box. I suppose everyone can do that, can see that. Okay. So today's topic is obviously advanced charts and charting tools. There are a lot of charts which you can term as advanced chart. There is also one hollow candlestick pattern chart. That is also an advanced chart because it requires some brain to understand that chart. Okay. So today's agenda we are going to cover is going to be a slightly cover up of from the previous session itself, and in this session we are going to have a charts recap, I suppose, which is very very important for beginning traders, beginners, as well as those who are advanced level or those who are doing trading for a very long time. You will get a whole revision out of this particular charts because I'm going to explain it in a manner which is not normal, which is not a textbook definition of charts. That is why I have not prepared so much of content, written content on it, because I want to go full throttle practical on this particular topic. Okay, okay, yeah. So great. So I want to just go full throttle, completely practical on this one, and let's see what we have to do today. Okay. So first I will tell you what is Fibonacci retracement. The just a brief idea of those who could not come in at time. Let me just do and adjust one thing. Just give me some time. Okay. Hmm. Okay, so this one is done. Let us see. So last time we did this Fibonacci retracements, and it was quite uh, an important topic because retracements are itself in itself a whole science. It is not art. It is not charting tool, just a mere charting tool. It is advanced and it is very important to understand all of this. Okay, so if you can see this particular thing, let me check out the comments itself if anybody has done something. Okay, yeah. So, Fibonacci retracement, let us do that. How to do it online on charts, and how to basically see the levels, the retracement levels, how to understand them, how to make sense out of those retracement levels. What are these retracement levels? That is also important, which I taught that day. So there is a 0% level, obviously the start of that particular swing. There is a 38.2% level. There is a 61.8% level. There is a 50% level. There is a 78.6% level and a 100% level. Okay. And if we overextend this particular Fibonacci retracement, it goes up to 1.618% level. Right. So 161.8%, that kind of a thing. I will show you on the chart. Don't worry about it. Okay, so this is the show today. Let's just do Fibonacci today, and then we will do a charts recap in which we will go through line, bar, baseline, column chart. Column chart is new. Heikinashi. Heikinashi is probably the thing which okay, many of you might be waiting for, and many of us are waiting for to understand what exactly needs to be done. Okay, so let's start today's session. Let me just share screen with you guys. Okay. I suppose everyone can see this chart, right? Okay, great. So here we are on this particular chart. This is, I'll have to change the chart settings. But if you want to change the chart settings, basically, you select this particular thing. Okay. In this, you've got so many different types of charts. There is a bar chart, candle chart. Candle is candlestick. Okay, hollow candles chart. Hollow candles is a bit tricky to understand because we are used to candlestick. Okay, but hollow candlestick are different. Hollow sometimes appears to be hollow within. Okay, what is the meaning of that? We will cover in the next session, not this one, because once you understand candlestick, it's very hard to accept hollow candlestick as a charting pattern. Okay, yes, it is true because many people try to understand hollow candlestick from a perspective of those who have learned candlestick itself. Okay, candlestick is straightforward, but hollow has some form of an attachment to it, some form of a derived attachment to it. That attachment, that concept is important to understand. Okay, so first we will go towards the line chart, very basic line chart. Okay, this is this particular line chart that has been going on. These are certain lines which I will kind of tell you what it is. This is the trend line that we had drawn on this particular video only. It's on some video that we have discussed on this. Maybe in the commodities chart we have done this. We had been trading alongside this particular, along with this trend line that we had drawn, and has been working wonderfully well since March of 8th till the point of 7th of November, 4th of November, where the price just bumped up and it completely broke out from this particular trend line. Okay, if I just turn it to the candlestick, you will see how it went above. It took a support on this trend line and then it went up again. Okay, if you have to zoom in on this particular operation, how it went up. Okay, so 4th of November, 7th of November was a bit of a struggle for this particular price chart, but then it was clear to the market that it is not a false breakout like this one, because we have got a green day on the next day. Even though it is a spinning top, okay, we've got a green day and a huge green day because of some news, and then this particular red day, and then the market has now stabilized itself, I would say, and was going full throttle up. But for now the market is waiting. What this particular event is for which the market is waiting? That particular event is the FOMC meeting in this particular week, right? So a lot of traders are going to base their trading strategy. Okay, they are going to base their trading strategies, and a lot of institutional players are also going to handle their portfolios in a manner which suits this particular FOMC meeting minutes, okay, which suits the indication that is being provided by the FOMC in this particular week. So it is a very important week, even though the volatility is a bit low. Okay. Another important thing I want to discuss, if we are doing just the candlestick here, I suppose everyone knows candlestick pattern. Okay. Candlestick chart, everybody knows. Very simple. If it is a green candle, then the open is here, somewhere here in the lowermost part of the this candle, this rectangle. Let's draw it so that everybody can understand. Okay, let's say this is the candle. This is called the candle of the particular body. Although a few people may say that this is not the candle, this is the body of the candle. Although you can say that it is the candle only. Okay, no problem in that. Another part is this. There is a upper wick. Now these wicks are very important because they give us the extent of the trading movement for the day. So these upper, this is called the upper wick, this is the lower wick. Now wicks have different names. We can call it tail, we can call it shadow, whatever. Okay. So this particular body is called a candle, and these are the wicks or the tails. Wicks in a candle. Okay. You've heard of it, the middle part of that thread, which we basically burn in order to light up a candle. It's called the wick. So we have got the upper wick and the lower wick. So what does it signify? If you're understanding all this, what does it signify? That is the important thing. Okay, it signifies the very important and the very, I would say, fundamental thing, that is the OHLC data. Okay, so we have got an open. What is OHLC? So we have got an open, high, we have got a low, L, and OHLC, that means close, right? Now this OHLC, O, high, low, and close, this data is very very important from the perspective of understanding the chart itself. Okay, every single day these four numbers are very important on the chart. Okay, and out of all these four numbers, this thing is way more significant. Okay, we will understand why. Which chart type considers closing prices to be absolutely essential, that we will also see. Which chart pattern basically gives the most significance to the closing price, that we will see. So in this case, if it is a green candle, the close is above and the open is lower. This is the low for obvious reasons, and this is the high for obvious reasons. Now green day signifies a bullish movement. Okay, and if we change its color, let's say it is a red day. Okay, let's see, where is this particular thing background? Yeah, let's say it is a red day. Okay, what will happen to the open and close? It will get reversed, obviously. The price opened at a higher price and it closed at a lower price, right? So this is the understanding behind it. of a candlestick. This is particularly for those who are beginners. Okay, that's okay. Okay, yes. So this is the candlestick chart. Now I had to improvise for now to show you what is candlestick. But talking about this particular asset, let's say the candlestick went all the way above and it closed above. Okay. In the next scenario, on the next day, the candlestick came down and it opened within the trend line. If you can see within the trend line's range, if you can see very closely, it just opened up on the trend line only. Okay, that means the trend line itself became a very huge support on this day. Okay, so to understand candlestick, it is very important to look at this thing also. You have already understood the trend line also. So if those who are beginners, they can go on to the previous videos to understand what is trend line, what is the theory behind it, and all that. So this particular asset just opened on the trend line. It closed very minusculely up with a very good trading movement within this particular day. Okay, the movement was somewhere around, not the movement itself, but it was, the movement is this one, and the range is this one, and the movement is this one. Movement was however small, but the range was very good. Okay, the next day it opened up above the trend line, it closed above the trend line. That means it was a completely bullish signal of what was about to happen. Okay, and we had done this, obviously we had already covered this at in our group also. We have seen multiple levels that have worked out wonderfully for us within this particular week, and the previous week, obviously. Yeah. So this is the candlestick chart, very basic. Let's go on to bar chart. Bar chart is nothing but the American version. Bar chart is the American version of candlestick chart. Okay. Why I'm saying that it is American version of candlestick chart? Because there is literally no difference between a candlestick and a bar. Okay, absolute no difference. The only difference is how they look. Okay, it is in the appearance and nothing else. Everything else remains the same. So let us draw. I haven't got multiple brushes. I've got, but not. So let's just take this for an example. Today's. So if we see the wicks are like this, okay, and the trading movement is kept on a higher emphasis. Okay, this particular line is very high importance, but these wicks are shown to be on the left side and the right side. These are called the wicks in this case, and the wick on the left hand side of this line, okay, is the open price, left side. Okay, so I shouldn't have deleted the open and close wala thing. This will just add up. If you can see this bar, we are talking about this bar. Okay, yes, right. So it is on the left side of the bar as the opening price for the bar. Okay, and this one on the right hand side of this line, this particular single thin line that is appearing in here, it is the trading range, which means high and low as these points. Okay, high and low. It almost looks very okay, because it is not very soothing to the eyes. It is not very attractive. Now look at this and compare it accordingly. You can see it better. You have got something very material in here. Your eyes will see very clearly where is the open, where is the close. Whereas if you turn to bar chart, you will have to stinch, you will have to look, right? You have to put strain on your eyes in order to see the open and close. And open and close are the most important thing throughout the day. These are the only two values that one trader is actually looking for, right? So open and close, if you are not able to look, okay, everything is about visual appearances. Even many people focus on indicators. So those indicators which look extremely complicated, almost like, let's say, Ichimoku cloud base. Okay, if somebody looks at this particular indicator, you are very convinced that yes, this is a very complicated indicator. It looks like a gamified version of something. Okay, let me just, why we are considering Ichimoku cloud to be an advanced indicator or something that people love, okay, or people understand it really well. Why it is like that? Because it looks like as if it is a gamified version. Okay, it is easier to see, it is easier to predict. Okay, but the problem is it is harder to predict using Ichimoku cloud. Ichimoku cloud tells us a lot of things and it gives us a lot of signals. Okay, another example I would say is a bad looking, let's say, not a very attractive looking indicator, let's say. Okay, so we can talk about 3 ma, 3 ema. So emas are very basic. Okay, we see just 3 lines, okay, or 4 lines or whatever lines, right? So this does not look very complicated, right? This does not look very appealing to the eyes. We want Ichimoku cloud or even Bollinger bands, right? Bollinger bands also look very good. So many people prefer Bollinger bands as well. The thing of the talk of substance here is that this does not look good. Okay, you have to stinch, and also you have to spread it out evenly so that these kind of lines, they are matching at this particular level. So there was a close here, and the next day open was almost the same level. So it looks as if it is connected when you shorten it out. Okay, it is connected somehow, but when you spread it out, then you can see, yes, it is almost the same level. So the problem with bar chart is not something relating to its construction or its formula, but it is just how they look. Okay, it's better, and I would suggest that you use candlestick. There is absolutely no difference between a bar chart and a candlestick chart. Okay, this has nothing to do with if somebody prefers bar chart, it is absolutely perfect. But candlesticks are way better in interpretation. That is absolutely correct. So why? Because certain candlesticks, let's say for example this one, this I know that it is a Japanese candlestick pattern. Okay, or if we are talking about, let's say, this one, okay, I know that this is an which pattern is this one. I have taught all the patterns in previous videos. I suppose many of you can understand which pattern is this. I want you guys to comment in the chat box. Okay, let's see how we have got any answers or not. So just give me an example. Give me the answer of what pattern name is this particular thing. You have got a downtrend and you have got this particular candle, after which the candle has taken support on this level and then it has went up. Okay, so what is this reversal pattern called? You can, if you don't even know the name, you can just look at it. I have taught you hammer. Okay, and it looks exactly opposite to hammer. It is not a hammer. Okay, so what it is? Opposite to hammer, you have got the answer already. Okay, so this is the scenario here. Okay, and let us see what is the next type of chart. We have seen bars, candle, and line we have not covered. Okay, line. So line charts are very good. Okay, for those who are beginners. In fact, many people who have terminals and who trade on a regular basis on a mobile terminal or whatever, you see a line chart. Line chart is considered, default kind of a chart. So if you open any basic terminal, you will see. Okay, so if we go on and see this particular thing, it looks very appealing. If I just remove everything, okay, if I remove all the drawings, okay, So yeah, so here we see that this line chart particularly is very interesting, and it is considered to be very important from the perspective of getting a glimpse, getting a glance of what is happening. Now you noted that these lines are nothing but the joining points of closing prices. Okay, this is the closing prices that has been joined by a line. Okay, just like EMA is joining in. All every single point that has been attached every single day is the closing price of that particular asset on that day. Okay, so if you see today's today's movement, it has been up. Okay, and what is the interpretation? Let's see what is the interpretation of this line chart. It has been moving up in a very steep manner. Okay, we have seen one up, one down, one up, one down kind of a thing, and now it has consolidated in a mountain shape of form, right? And then again it has taken support somewhere here, and it is going up. Okay, so just by looking at this only, by looking at the closing price itself, you can get a lot of information. Okay, even though if it is just the closing price, even if I'm putting my cursor on this particular level, you can just see here. Okay, only one price is being shown, only one figure is being shown, and that is the closing price. Okay, it is very important to note that many people consider line charts to be not very useful, or completely they thrash it away, but it is absolutely wrong. Okay, it is absolutely wrong. Line charts are very very helpful. Now let's try to do some analysis on this particular thing only. Now look at this. We can draw a very good trend line on it, and we have got certain wicks up here. Okay. This is a false breakout, obviously, right? If you can see it clearly. Okay, bad time for a call, isn't it? So this is the thing. You can make a wonderful trend line only on the line chart. Now let's convert it to candlestick chart. Okay. Now you will see we have drawn a perfectly, absolutely, flawless trend line. Okay. This is just one single example of what a trend line can do. Okay. What a trend line does using a line chart. Okay, line charts are not absolutely worthless. Okay, and now I've shown you how they are not worthless. This is just one drawing that I've drawn. Line chart does a lot much more. Okay, a lot much more, and we can see how we can just use horizontal levels in order to make supports and resistance. And now you make this line, this is acting as a support. Now you make this line from here, it is acting as a support. You make this line particular from here, because we have got multiple touch points at this point and resistance at this point. This is a very important point. Okay, which is 1808. Okay, if we cross above 1780, which is the current resistance, it is acting like as a resistance. Now again this part is also looking like a resistance, which has acted as a resistance. 75 almost, it has went up to 86, I suppose. Okay, in these days, last 2 days it has gone up. Let's see when it has went up. Yeah, so it was high as 1784, 1786, somewhere around, right? So this is the scenario. Now the question is, the answer is in this particular thing is that line chart solves the complications. Okay, it makes things simpler. Okay, so if you are feeling that you cannot analyze much on a candlestick chart, you can always go back to the basics. You can always turn on line chart using this particular thing, and you can always see where the price is headed. You can make awesome, I would say, supports and resistance levels, and it will help you wonderfully well. Okay, now this is how it has been working. Now look at this, just one point that we are seeing, why it is an important point, because we have got a lot of consolidation at this particular point, a resistance and support at this particular point, right? And that is why it is working as a resistance for now. Okay, it is live market, so you can see how it has acted. Okay, now previously also I suggested that somewhere around 1737, if I'm not wrong, I'm not remembering it correct. Maybe you might have seen the levels on the article that we posted on Telegram. On that particular article, I have discussed every single level that the price can go to, and there was a very high chance of a bullish reversal in this condition. Okay, and we have got a bullish reversal after a small consolidation. This bullish reversal will be even stronger if the FOMC meeting turns out to be what the market is anticipating it to be. Okay, that is also very important to note. Okay, so we have got this one, and let us we have seen line charts. Another important and very unique aspect of line chart is that people consider line chart to be substandard, to be basic, and to be used only by the beginners. This is the scenario. This is the overall perspective of the market. If you have put on a line chart, people will not understand that you're doing something very, very crucial, right? Let's convert into a candlestick chart, and let's just see. Let's add up any important I say, because it is very very crucial in understanding this. Let's say I put in a Bollinger Band. Okay, I got a Bollinger Band on the chart, right? Bollinger Bands, I've already posted an article on this one, how to analyze, interpret this particular Bollinger Band. In the future also, we are going to do an indicator series in which we will dive deep down in understanding every single indicator from its calculation formula and its construction all the way up to the point of how to interpret it, right? So this is the Bollinger Band level. So what is this Bollinger Band? What is Bollinger Band right now? Is it something? Is it something of value, or is it something worthless? No, right? It is of value. It is telling us that somewhat there is a bullish reversal in this particular thing. Is currently it was just diving down. Look at this red line. Okay, now what is this red line? Line is itself every indicator, every worthwhile indicator is a line chart. Okay, I'm talking about BB here, that is Bollinger Band. If you convert it to say RSI is a line chart. We have seen it here. Okay, now let's see moving average, convergence, divergence. Okay, MACD, that is called in short. This is again, except for the histogram, it is a line chart. Okay, so every worthwhile indicator, any indicator that makes sense in the market and that is used extensively, okay, which is used extensively, it is considered to be important. Correct? So this is the way we understand line charts. Line charts are not completely useless. They are very important from the perspective of simpler but powerful understanding of the market. Okay, this is simple. This is simple yet powerful understanding, because closing prices, I am telling you today that there are certain people who just do calculation on closing prices, and they get the next days or the next week or the next month or the whole quarter pivots, okay, or the support and resistance levels. They do certain calculations on that particular closing price. Okay, maybe it is the start of a month, maybe it is the start of a week. They do some calculations on it. Even I do some calculations on it, and we can get certain pivots out of it, some levels out of it. So this is very very crucial, that it is giving the importance to the thing that needs to be given importance to. Okay, so line charts are very important. Now let's go on further to see one of the most I would say basic. This is also very basic. Okay, but it is important. Okay, mountain and baseline is wonderfully, it works wonderfully well when you know how to use it. Okay, now let's say you've got something like a double top pattern. Okay, let's say this is a double top pattern. Okay, we can adjust this particular line. Just give me a moment. So let's say you have got a particular uh you know a pattern. Let's say this is a double bottom pattern. Okay, somehow it is looking like a double bottom, right? Let's say this is the double bottom. Okay, this is a classic chart pattern. I have already showed you this particular pattern back in the day. Okay, you can go out into the video section of this particular channel to check that out as well. So I know that the most important thing to be broken in a double bottom is the neckline, right? So it is the neckline, and I'm adjusting my chart to the neckline level. Okay, right now I've got a position where I can take and keep my orders on this line or just above this line. I can keep my stop loss just below this line. So mountain baseline is nothing but a line chart, but with a pivot. Okay, with an inbuilt pivot on which that particular pivot, if the price action appears to be above that particular pivot, which in this case is somewhere around 1726, that is going to be the neckline for this double bottom if you consider it, right? And if it breaks this, if it breaks this particular level 1726, then we have got a very good breakout. Okay, leave this trend line. Okay, leave this trend line. Okay, trend line already broke, and we have already seen a very good up move. But just based on this particular thing, mountain and baseline, what is the utility of mountain and baseline, that can be understood. Okay, again, if we are seeing a pattern, say, okay, this one is a good pattern, but I can show. So yeah, like this one. Okay, let's say price action is taking support on this level, say 1808. Multiple time it has taken support. This here, then this here, and then it has taken support, consolidated, and then broke down the next day. Okay, so let's see. Okay, let's convert it into mountain and baseline. We have got a line. Okay, so it has consolidated in the sense it has gone down all the way and it has covered the position. It looks like this acted as a support, but it does not. It struggled for 2 days in this particular scenario, and then it went down like a waterfall. Okay, now let's convert it into baseline. Now look at this. How easy it is for me to identify where I should put my trade. Okay, where I should put my limit order. Okay, this is the way the limit orders are kept. Okay, by a lot of people. Okay, and mountain and baseline charts are very crucial because it combines two powerful methods. The first one is the line chart method, and the second one is the pivot method. Okay, or pivot method, where it provides us a pivot and it makes looking at the chart very simple and very effective. So this is the way you deal with this thing. Okay, somebody has reacted very angry, I suppose. Richard. Okay, yeah. So really sorry, Richard. I suppose I could redeem myself by teaching you something. No worries. Let's say, if any trouble in the display, if any trouble in the audio, just post it on the chat box. Okay, because I'm talking from my mind. Okay, I'm not reading any book and telling it to you. Everything is up here. Okay, so if I'm reading it, it makes complete sense to not go back to the chat box and look at it. So what I do is, after five or whenever I get time, when I'm completed from a concept, then I look at the chat box to see if people have asked for certain things. And let's say if there is a technical difficulty from my end, let's see I forgot to switch on the microphone, or if the display is not visible, if the charts are not visible, then I would not be able to understand that this is the problem. Okay, so just put it on the chat box if you feel like that there is a trouble or a technical difficulty. Okay, so yes. Now this is the mountain and baseline, very important. Okay, there is a high low also. There is a high low chart. Most of the people who are swing traders, they use high low chart, and they also like doing what is called scraping, which is almost called scraping, because high-low charts are, from my perspective, okay, completely purely based on my perspective. It might contradict others' perspectives. Okay, high-low charts are, from my perspective, not very much useful. Okay, because you get high number for the day and low number for the day. Okay, now most of the indicators, you go anywhere in the world, most of the indicators, most of the, I would say, uh, you know, trading systems, trading, plans are completely based on open and closing prices. And if I have to consider in OHLC, which is the most important data to be looking at, is the closing price. Okay, even though we write it, or even though if we spell it in the absolutely reverse order, OHLC. Okay, but C is very important. Okay, this emphasis on the C, the closing price, has to be, complete. Okay, without any trouble. So we see that there is a high low chart kind of a thing. Okay, now personally I don't use it, so you may try it, or you may kind of use it. And yeah, so this one is the thing. Another important thing is this column chart. Okay, the column charts are very very interesting, because they completely look like as if the volume has spread out. Okay, the volume has spread out on the chart, and it has completely hijacked the whole chart. No, absolutely not. Column charts also have their very interesting, perspective, and it is used for comparative analysis. Okay, not something that needs to be taught within an hour. Okay, but you can compare different things, different assets, or something like that on the column chart itself. Okay, now in this column chart also, which is the most important thing that has been noted? Now look at this. Okay, let's say this one, 20. You can see the number, you can see the number here. Okay, let's say the topmost point is 2049.77. Okay, that is the number where we are stopping at, 2049.77. Now let's convert it into candle chart. What is 2049.77 in this particular candle? 2049.77 in the OHLC, which figure is 2049.877? Obviously the closing price, right? So again, column charts are very useful because they put a huge emphasis on the closing price. Okay, what matters is where we end up. Okay, not where we started, or not where we are currently living at. Okay, so this is the part where column charts provide you absolutely, you know uh, a glimpse of what is happening. Another important thing that column charts can provide you, or an interpretation or a perspective they can provide. What is this perspective? Now if I'm drawing a trend line, let's say on the candlestick chart, okay, or a line chart. Okay, line chart is very simple to draw a trend line on. Now here we have drawn from the closing, so let's just put it up. Let's move it up so that you can see it better. Okay, now according to this trend line, the price broke out on this day, 8th of November. Okay, it opened up, and if I saw that it opened up, because both of these 2 days the prices were above only. Okay, here it closed above, here it closed above, and here, although there was a indecision, but the next day it opened above the trend line, not below. Okay, there was a wick obviously which went down all the way down, but it did not mean that the price are going back into the trend. Okay, because there was also multiple news related to this thing. Okay, if I'm doing technical analysis, then it does not mean I have to close my eyes and pray to god that my technical analysis turns out to be true. Okay, this is not the way that you do it. Okay, I have to be aware of what is the market situation. So obviously I was very bullish. I might have taken a trade from this point only, 1654 somewhere around. I took a, okay, 1654 something. Okay, at this point. Okay, so we went all the way up. Okay, and where does the saturation come in? Okay, that saturation is very well. highlighted by a column chart, right? You can see red green very clearly in this particular thing. Now, if you see this particular thing, that 4 day bullish signal, 4 day that there was a bullish, completely bullish overhaul in the prices, and then a red candle. So column chart are somewhat similar to looking at it in the sense where the reversals are occurring. Okay, it shows you completely clearly where the reversals are occurring. Now, another professional, like very pro tip that I can give you is that column chart, while looking at a column chart, note this particular point. I don't usually reveal my secrets, but this is a thing that I'm going to give you today. Okay. There are people who have left, I suppose 12 people. So you guys are the exclusive people who will get to know this information. Now, even in the future, I'm going to do the Heikanashi. Okay, maybe not today, but tomorrow we are going to cover the Heikanashi charts, wonderful charts, what they do and how they do. So we will cover that. But look at this. There is a bullish overhaul completely. Now, to get to know that there is a reversal, there has to be a very steep decline. Okay, in the closing price, just like this one. There is a very steep decline here. This is a signal of a potential sell or a bearish momentum to come in. Okay. Now, this is not a very, very good bearish reversal. Okay. But you can see that the price has overall it has come down. Right. Another important thing to note in a column chart is that the price will never end up crossing such a level. Okay. This is a pro tip. If the columns are closing like this, like a big thump in the price, a big plunge, okay, in the closing price, then it is very hard to close above this particular price. Okay, if it is closing above this particular price, then it is mostly a false idea, it is a false breakout. Okay, it is very hard to close above this particular close. There has to be a big plunge like this one, a big plunge. This is not a big plunge, but yet it has turned out to be very good bearish momentum. Okay. Now we have kept it on a daily chart. That is why we are seeing certain movements. If we go down to smaller charts, then it is even more. It will make even more sense. Okay. Right. Will make even more sense where the prices are heading. Now there is overall the movement was quite bullish on this day, on Tuesday, right? It was overall quite bullish. I was also bullish yesterday itself that I knew that there was a reversal coming in. Somehow today it happened. Okay. And we have seen the upward move somewhere around from 30, 37, 34. So quite a good level to work in, right? Not 34, it was somewhere around 33, right? Monday it closed somewhere around 33. Okay. See, for example, this particular point. This is a closing 37 somewhere around. Okay. And then it went up. Now current is 46. So even in a low volatility market, you can earn very well. That is the example of how to understand technical analysis and how to gauge future movements, how to predict future movements early on. Okay. So that you have to ready yourself, you have to ready your position first. Okay, great. So this is the column chart, obviously. Now let me just give you a small tester of what Heikanashi is. I'm going to teach this particular thing in quite a detail. I've got like 4 minutes, but let's see what we can do. Okay, we're just going to observe it. We are not going to do anything. I'm not going to explain you anything. Okay, we are just going to explore and understand what is Heikanashi and why is Heikanashi useful. Okay, just by looking at it. Okay, we have to just look at it, do nothing else. Okay, look at the candlestick chart. Okay, memorize this chart, how it is looking, which day is green, which day is red. Okay, let's keep our visual short. Let's keep our visual currently. Okay, what is happening? This is our visual currently. Okay. Now let's see. This is the visual. Have you seen it? Just get a photographic image in your head. Okay. Use your photographic memory. And now let's just switch it up to Haikanashi. Now look at this. Okay. Now what is the difference that your brain will tell to you that this looks organized. Okay. When compared to this. This does not look organized and I don't like it. Okay. Your brain will say to you that let's switch to this particular thing only. Because this looks organized. Red, green. I see it. Okay, properly. Like this one, red completely, green completely, then red completely, two greens, then red completely, then somewhat of an indecision movement, then red completely, then green completely. So this looks as if somebody has adjusted every single day the prices, somebody has adjusted to look as if it is organized. Okay, this this was a room of a messy teenager, and this is a room of a disciplined army man. Okay, correct. This looks organized, and this shows many people say that Heikinashi itself is a chart that you can work on without any indicator, and you will get wonderful reversal points throughout the Heikinashi chart. Okay. Now another important point that you should note, okay, is that today's day. Look at today's day. Okay, it is showing red candle, right? What it is exactly? It is green day. Yet Heikanashi is showing us a red day. Why it is? Okay, why it is happening? Even though we have recovered from the position of 37 in the low, yet it is showing a red day. What is the reason behind it? Okay, how it is happening, we will come to know in the next session of Market Insights, and we will do it all. We will understand Haikanashi. We will also talk about a trading strategy which is very fundamental. Many people say that this particular thing, you know, Haikanashi chart is the only thing that I want to look at. Okay, many people say that. Many people say what? That these two are the only thing that I want to look at. Nothing else. Haikanashi and a certain indicator that they like. Okay. And nothing else. Even some people say only Haikanashi is required, nothing else. And those people who are very excited for the next session, I'm going to give you a word of caution right now itself that once you start using Haikanashi chart, don't ever rely on Haikanashi completely. Okay. Now this is my ethical part of analysis. Okay, being an analyst, I have to be ethical and I have to give out very obvious signs of risk management, of controlling your appetite. Okay, controlling your appetite is one of the most important things that you can do in the market. Okay, otherwise the market will control your appetite if you don't control yourself. Okay, so Haikenashi here is a wonderful charting method. It is a wonderful thing to understand itself or to look at itself, right? This is so beautiful to just look at. Okay, another important part, once you go Haikanashi, you should never rely on Haikanashi completely. You should always use candlesticks. Okay, okay, should always use candles. Don't ever think that I have become an advanced trader. Even I myself, after doing so much of things, okay, I don't consider myself advanced trader because Haikanashi is just a charting tool. Okay, although it will give you wonderful results, don't consider it to be a standalone thing. Okay, and consider that it gives reversals after confirmation. Okay, yet it is not to be trusted completely. Okay, it will tempt you, it will obviously tempt everyone to be looking at such a organized chart as if somebody has cracked the code, right? It looks as if somebody has cracked the code, right? Everything is very organized, everything is looking perfectly fine. Okay, it looks as if the market has been completely cracked. Okay, I know where the reversals are happening, I know where to take positions and when to take positions, right? Okay. But still, you are not to be changing your strategy completely. Okay. Candlesticks still remain the standard, and many people who have done Heikanashi trading, they also look at candlestick chart. Okay. It is not to be used completely. Okay. Many people can do that. Obviously, it is completely up to you, but this is just an idea. Okay. Because this does not provide, the utilities of a candlestick chart. Okay. You get so many ideas from candlestick chart patterns. You get American chart patterns, you get Japanese chart patterns, you get multiple ideas just by looking at the day, just by looking at the day's candlestick. Okay. That is the whole idea of price action strategy and technical analysis, which completely relies on candlestick. Okay. So thank you for joining in, everyone, for today's session. And it has been absolute pleasure. So let us see, in the future we are going to do Heikanashi, which is a very advanced chart. And if by God willing, if we can do, let's say, the point and figure one. The point and figure is absolutely fantastic. Okay. So we can do that one also. So until that time, thank you very much for joining in, and take care, everyone. Goodbye. Happy trading.